Well, welcome and thanks for joining us for this segment of Making Sense, where we tackle financial topics that impact your community, your family, and your bottom line. Today, we're talking about our economy in general, inflation, the real estate market, and the things you need to know to make the right financial decisions for you. Joining me today, Bill Verret from McQueen Financial Advisors, along with Alex Lutke from Forest Area Federal. And thanks so much, gentlemen, for joining us and taking this time to help us better understand our financial pictures.
Thank you for having us, Mark. I appreciate it.
It's my pleasure. All right,
appreciate it.
Bill, let's start with a very broad question, but it's a question that an awful lot of people have questions about, and that is, what is the state of our current economy?
Well, right now, it's generally looking pretty good. You know, unemployment is low. The last unemployment number that came out was 3.8%. We also had 300,000 plus jobs created in March. GDP's been pretty strong too. The fourth quarter was 3.2, 2.5 for the year. And the expectation here for this year, the Federal Reserve was saying 2.1. And then yesterday, the IMF came out was saying 2.7. So there was talk about a potential recession, and that's still possible. It looks like it's going to be a soft landing here because GDP is still positive. Usually a recession is defined as 2 quarters of negative GDP growth, and it doesn't look like that's going to happen. But we also do have some headwinds out there. We have high interest rates, inflation that everyone knows. And even though we created 300,000 jobs, there was a lot of jobs created with people that were part-time or their second jobs. So everything's not rosy, but it is looking pretty good where people can work. Companies are still looking for workers, shortage of workers. But with inflation, you know, it's hard for people to keep up. So kind of some mixed messages there. And we do have some headwinds.
Yeah, you know, when we talk about when people that understand finances a lot better than me, like you, throw out numbers like GDP and job creation, for a lot of us everyday people, those are kind of hard to feel and understand. But I think everyone that's watching right now can understand this concept of inflation. We're all paying more, especially it feels like at the grocery store, but in other areas. So in very simple terms, what's the deal with the inflation?
Well, inflation has come down. That's the good news. But it had spiked up to 9.1% in June of 2022. The latest inflation reading was 3.5 for core inflation. I mean, when they stripped out core, it was 3.8. Just the headline number was 3.5. So it is down dramatically from where it was in a high, but it's still higher than the Fed's target. So that's the challenge, and that's why they think the Federal Reserve is going to continue to keep rates where they are at 5.5%. You know, and a lot of loans are tied to that, SBA loans, short-term loans, and so it is impacting not only consumers but small businesses, right? So these loans that are tied to these rates are much higher than they have been in the past, which is also creating some delinquencies in loan portfolios. One thing I would say is that the Fed Powell came out and said that the inflation numbers are probably going to keep them on higher for longer, right? You know, they don't see that there's a need to reduce rates because jobs are still pretty plentiful. And their two mandates are inflation and jobs. So those two things they focus on. And, you know, they're trying to get inflation down to 2% target. I don't know how realistic that 2% target can be really, though. I mean, after the pandemic, a lot of people exited the workforce. You know, there's supply chain issues, which have basically corrected, but there's still shortages. So we'll have to see if that inflation number can get down to that 2% target. I've been in a camp that I think it's going to probably be in that 3% range, maybe 3 or 4 versus 2 to 3 going forward.
Yeah, Mark, one thing I'll add there, Bill mentioned the idea of delinquencies. And as an industry, we are seeing delinquencies increase, especially in the fourth quarter of last year. It was significantly higher than it's been since the pandemic started, right? But we were at historic lows during the pandemic. So what's happening, I mean, to what Bill talked about there, unemployment's low, but inflation's high. So people are not being able to keep up with their raises that they're earning at their work. So they are being squeezed. And so auto loans, credit cards, things like that, there are delinquencies happening on those. And you're seeing delinquency or credit card volumes increase as well because people are trying to keep up with what they used to spend And so those are going on credit cards. So you're seeing that balance nationwide increase too. So in the spring here, when people get their tax returns in, delinquencies typically go down because of that, because they put that funds on their delinquent loans. So you see it go down, but it'll be interesting over the next couple of quarters to see if that goes back up and how it is year over year from prior year.
Yeah, and one other thing, Mark, I call it kind of like some stealth inflation. So we have these things that we're really not thinking about. Normally we think about gas prices, food prices for the inflation, but you also have an inflation, big inflation in insurance, utilities. People's homeowners are going up, their autos going up, their business insurance, health insurance, utilities, and then Alex mentioned also before taxes. So all these things are eating away at the purchasing power that consumer has, and the incomes haven't been able to keep up as much. So they have been borrowing. One thing is that, credit card payments are at record levels, the interest rates are at record levels, and the balances are at record levels. So that's another thing that's some strain in the system, and we have to keep an eye on.
Is it the kind of, it sounds like you're describing kind of slow trauma in terms of, like, things got expensive, but a lot of folks were able to kind of scrape, but eventually it's 1,000 cuts kind of situation. Is that kind of where we are with inflation and so many of these factors with the economy right now, where we're starting to feel with delinquencies and some things that these may be impacting a different segment of the population than maybe the immediate ones or the people that are not going to be impacted? Does that zone kind of move with time? Living under these conditions?
Yeah, I mean, usually, the lower income and middle income is more impacted. The higher incomes and wealthy have a lot more additional discretionary money available.
Sure.
So it doesn't impact them as much. So, if you're living paycheck to paycheck or not even paycheck to paycheck, I mean, the impact on sometimes these insurance payments are thousands of dollars a year, right? It could add up quite a bit. And one thing that happened, there was a lot of stimulus money that went into the system and people had savings. And now they've kind of eaten through those savings quite a bit and been borrowing to offset that. So consumer spending in March was good again, right? March and February it increased. So consumers are still spending, but they're not spending. They spent most of their savings. So now they're borrowing to continue, spending. And that's the concern, is that, they don't have the money to do it. And now the payments are increasing so much. So it is a challenge. But, Alex might be able to tell you a little bit more about how money's coming out of the credit unions and banks deposit wise, because they have to make these extra payments and expenses.
Yeah, we're absolutely seeing that. And then just to touch on a point that you made earlier with the property taxes, I mean, 5% increases of the cap, and we are definitely seeing that here in Michigan. So locally, that's really putting a strain on homeowners on top of the interest rates that they're paying. If they just recently got into their home, they're getting these unexpected increases as well. That's really putting a huge strain on them. So yeah, we're definitely seeing that stuff locally.
Yeah.
And again, we're at a situation where if you only had to deal with one of these things, one variable at a time, one moving part, you could do that. But all of these things adding up, it certainly takes a toll. Bill, you mentioned it a couple times, and just so that we all understand, because an awful lot of us are paying this, why are we seeing our insurance premiums go up?
Primarily because they had a lot of losses nationwide. I'm out here in Southern California. We've had wildfires, hurricanes in Florida, Louisiana, Texas, hailstorms. Today, I don't know if you guys saw the news, Dubai had record floods, right? Most rain they've had in 75 years. So it's actually worldwide. You're seeing these catastrophes, and a lot of the insurance companies actually use reinsurance, which is insurance they get in addition to what they cover, kind of like extra insurance. And those rates are going through the roof. So in a lot of states, California, Florida, Louisiana, and Texas, a lot of insurance companies are pulling out and not writing coverage anymore. And you're starting to see it filter into other states also, like Michigan. What I've heard is that manufactured housing, the premiums have gone up a lot, and those are more susceptible to storm damage. And then the building material costs have come up so much, right? So building material costs, the labor shortage, all these are adding to higher premiums and risks. So the insurance companies are really, some of them are driving up premiums 30 to 50, even 100%.
Yeah, Bill, we had a conversation before where you mentioned the price on replacing parts on these cars are so much more expensive than they ever used to be as well, with all the different technologies, the sensors. If you hit a fender, like, it's going to be a lot more than it ever used to be. So it's costing these insurance companies more to insure these vehicles, to insure houses. So that's just going to make those premiums go up as well. And to Bill's point, you're seeing it nationwide, but you're also hearing it locally. I was talking to a local um, broker here not too long ago, and he was talking about how people are upset about it. But if you were to go to other states, you're going to see even higher increases than what we're seeing in Michigan, and it's pretty bad here as well. So
Yeah.
All right. So, what is the deal with housing? You come to Northern Michigan, and it's so hard to find affordable housing. It's hard to find any housing. So where's the housing market in this economy that we're in right now, and what are we looking forward to?
Yeah, Mark. So the housing industry is kind of in a unique position right now, right? So there's a very small amount of inventory shortage, right? So there's a shortage of inventory, and a lot of that's driven by people who are already in 3% mortgages who don't want to move. Their payments will double or triple in some cases because interest rates have doubled from where they are. Also, from 2019, I mean, housing prices has gone up 30 to 50, some places 100%, depending where you live in the country. So, there's kind of a saying now that a lot of people can't afford the house that they're in now, right? Mm-hmm. So before, people used to move to downsize and things like that, but the cost of the payments and the cost of the house now is so much higher. People aren't moving, and the housing turnover is not as great as it used to be. This last year in 2023, it was the slowest amount of home sales in decades, right? And that's existing home sales because people don't want to move. New home sales were doing better than they previously have, and the percentage of new home sales to existing home sales was probably one of the highest it's been because the builders are able to build more, and that's where more of the affordability is, right? So if you're in a lot of these big cities or on the coast, like where I am, it's very expensive. Very expensive. So it is a challenge. The good news is people do have equity in their homes. So if they can borrow, if they need to put the kid through school, or they need something fix up the house, and that's what a lot of folks are doing also. They are, fixing up their homes and things like that and using the home equity that they have versus moving. And Alex maybe will tell you a little bit more about that too.
Yeah, that's a great segue to the point that I was going to make is our purchase volume on mortgages as an institution here is way down, but our mortgage lenders are still producing the same amount of mortgage loans because of the home equity fixed rate environment that we're putting out there, because people are doing that. They're fixing up their homes because they don't want to move. They don't want to have to go somewhere else to get that high interest mortgage. They want to stay in that 3% mortgage that they're in. And so we're doing the same number of mortgage loans. It's just in a different type of product than what we've ever typically done.
But I imagine that's a concern when and again, not a real estate agent, but it always felt like when people downsize, let's say you're in your 50s, you're empty nesters, and you no longer need that 5-bedroom. So now you're going to move out of that, which frees up that 4 or 5-bedroom house for the next generation to move up, which then frees up the mid home, which then frees up the starter home, and everybody just kind of rotates homes, right? But if people aren't doing that, if they're staying in their home because they can't afford to move, that kind of breaks down the whole cycle, doesn't it?
Yes, and that's a great example, Mark. That's a great example to explain it, because that's what's happening, right? That's really, where you are seeing some things is you are seeing some people in high price states, or even it doesn't have to be a high price state, people with a lot of equity. Some are selling and then moving to a lower price state like a Florida or Texas, right? And, they're able to pay cash. A lot of times they tell us, like people in California, we usually have a lot of equity, and, we'll drive up prices because we have the equity. And so I think the number might be like 20 or 30% now of houses are paid with cash,
Wow.
So there's a big chunk that people are paying cash because rates are high and they have it, So again, it's kind of a mixed bag. It's good prices are holding because that, creates, good equity that people can use to do things, including, college education, whatever. But, when housing prices goes down and it declines and, you start having, properties that are, falling apart, it's not good for any neighborhood, right? So keeping the property values up is usually good. And it usually helps the cities because they, as Alex said, they get more tax money, right? It's not good for us as individuals, but it's good for them, for the schools and things like that. So it's definitely a challenging market out there. We think it's still going to be tough here because the Fed's holding rates higher, right? Even though the mortgage rates for 30-year fixed usually trade off the 10-year treasury rate, them keeping that rate at 5.5, that 10 years gone from 385 at the end of December up to 460 today. So that's a pretty big move versus going down where the expectation was. And one of the expectations was Wall Street was predicting that the Fed will reduce rates like 5 to 6 times at the end of last year.
Right.
Now it's looking at 3 to maybe 0, right? So it's come down a lot, and so a lot's changed in this first quarter here, and so far starting the second quarter, it's gotten worse versus better as far as interest rates.
Alex, I want to put you on the spot here, okay? So
Yeah.
All right. So if there are people that are watching right now that are frustrated, concerned, worried about trying to buy a house, is one of the first steps they should do come talk to their financial institution to see what options and what to really to know the known, right? Is that one of the first things that you would recommend that those people that are concerned do? Come talk to you guys.
Absolutely. I would say come talk to your financial institution to get an idea of what type of rate you're going to be paying, and also what price you can afford based on the guidelines at that financial institution, because that will really be able to tell you what you can go out there and the price range you should be looking at. Because the rate, I mean, we haven't been in this environment in quite a while, but the rate is going to have a pretty big impact on what you can afford. I mean, when it was in the 3% range, like, it wasn't as big of a deal, but when we're up in where we're at today, it really does play a factor into it.
Especially when you're paying more for everything else.
Correct.
It's not just for the house. All right. So that's where we live. What about where we work? What about commercial real estate? What is that going through the same, when COVID hit and folks started working at home, we started seeing a lot of signs on a lot of office buildings with space for lease. Has that corrected? Has that changed? Or do we still have a lot of retail and commercial space that's available?
Yeah, we do. And that's a concern this year and next year, particularly, right? There's a lot of this debt that's ballooning or refinancing. And those payments, kind of like the consumer, those payments have doubled, right? Or will double. So a lot of these lending institutions are going to have problems refinancing their borrowers, and the borrowers just aren't going to be able to make the payments. So there's a lot of workouts going on right now and trying to extend the terms or conditions. But we think that's going to get worse before it gets better. And I think it's kind of like you were saying, is that, people are working from home now. They thought more were going to go back into the office, and they haven't. And then on a retail side, you have the Amazons, and now even some of these Chinese companies are coming in with prices even below Amazon, Temu, and I forgot the other one, Shein or something like that. So really a lot of pressure on retailers also in that space, and retail property owners. The ones that aren't doing as bad is owner occupied. So, if you have a business that is the owner of the real estate, they're doing much better. We're also seeing some cracks in some multifamily, even though rents and vacancies are still pretty strong. You have these companies that went in and were buying older properties and fixing them up, and they got bridge loans, and now those are in pretty much shape. Oh,
Bill's loading. We'll let Bill load. Maybe he can still hear us. But Alex, are you seeing people? Are folks still coming into the credit union to get back onto this housing? Are folks still coming in, applying for mortgages and looking for solutions?
Yeah, absolutely. I mean, that's still something that they're trying to get into. I mean, you have a lot of people that are trying to purchase homes, the younger generation trying to get their first homes. They're just the affordability with where they are at in terms of the wage that they make and the price of what homes are today, it's a real struggle for everyone trying to get into that home. So absolutely. Yep.
And we have talked a lot about all of these factors. We'll let Bill see if he just disappeared again. We've talked a lot about, we all know that we're paying a lot at the grocery store. We're paying a lot at the gas pump. We're paying a lot on our premiums. We're paying a lot on taxes. We're paying a lot of money out right now. What's the real, we could all share stories, but what's the real impact on the average American? What are you seeing as a leader at a financial institution?
Yeah, I mean, I'll take that conversation right back to what I mentioned earlier about delinquencies. If you look across the board with credit unions and banks, you're seeing delinquencies on the rise. I think it was up 1.2% year over year from what it was last year. So it's you can definitely tell that the average American is being impacted by having to pay more with the inflation that's happened, and it's really putting a strain on the average American family for sure.
Bill, welcome back. Can you hear us?
Yeah, I can. I must
right,
a second.
So we were just talking about all the things that we've talked about with folks paying more for gas, housing, inflation, all of those factors. What's the real impact on the average American? Your thoughts on that? What are you seeing?
Oh, we definitely seen that on the average American, definitely a major impact. As we talk about all these things are going up at one time. Like you said before, you used to have one or two things, but now you have your gas, you have your groceries, you have your insurance, you have these taxes. Almost everything is going up. There's very little going down. And one thing that Alex was mentioning before, when you go to qualify for these loans now, I mean, the insurance and taxes is figured into your qualifications also, right? So again, not only do you have higher interest rates and payments just from the mortgage and the housing prices, but also the insurance premiums and the taxes get figured into those calculations also. So it's really a challenge. And, if you got qualifying for auto loan, same thing, they're looking at your debt ratios. So it's definitely impacting people. And, a lot of people are having trouble keeping up.
Mm-hmm. Yeah, Mark, I feel like I say this every week, but at the end of the day, if you're struggling, go talk to your financial institution because they are definitely there to help you. Work through any situation that you have. We're here to help. We're here to navigate those situations. Everyone falls on hard times. It's not bad people that fall on it. Everyone, it happens to everyone. So talk to your financial institution, find ways to find solutions to help you out.
Well, Alex, I'm glad you said that. Well, actually, you just stole the last question I was going to ask both of you is what's your advice for people that are feeling it right now? Go talk to people that you trust. Mm-hmm. Make good conscious decisions, get advice if you're not an expert on the topic. Does that sound like good advice?
Yeah. The other thing I would add is budget. I mean, try and set up a budget, try and understand what those expenses look like. So that way, you have those numbers. Every dollar that comes in has an assigned place that it's going to go to. That's going to be the best way to try and figure out how to not fall behind.
Bill, that was an enthusiastic nod we got out as soon as the word budget came out of Alex's mouth.
Yeah.
That's so important.
Yeah, that's very important, So Alex makes a great point there. And, because a lot of people don't know until they actually put it down on pen and paper, right? Or a spreadsheet, right? And, Alex's company does a budget and plan and, all big companies do that and consumers ought to do that also because sometimes you're not aware. And I think when you line it up and put it down on paper or on a spreadsheet, you see it because sometimes, and let's say if you go through your bills, you may miss something that you're not thinking about. Mm-hmm. Maybe it's the cable bill or something else, or, the gym membership or whatever it is that you're really not thinking about. And then, it really adds up and it's definitely a benefit to do it.
It really does. All those cups of coffee, you think, oh, it's just a couple of bucks a day, but boy, it adds up over the course of the year. Alex, Bill, I want to thank you so much for joining us tonight, for making sense. Thanks to all the viewers that tuned in. We'll have more topics for you coming up in our next segment. But gentlemen, thank you so much. Have a great evening.
Okay, thank you. Thanks for having us. Bye-bye.
Take care.